Hi, everyone. So I wanted to spend a couple of minutes just walking you through how I got into commercial real estate investing. That's item one. Number two, I'd also like to share with you how the business model works in this type of commercial real estate investing, mostly around multifamily, but it also applies to other asset classes. And then the third thing is what to look for when you start getting into it with a little bit more detail and all the things I look for when I got into it. So quickly want to cover off on those three topics. And really, the first piece, I got into commercial real estate, I guess, either accidentally or completely deliberately, depending on how you look at it. We had a portfolio of investments, and I looked at everything and I said, so much of this lies in real estate, and it's happened somewhat passively. So if I did this actively, what could it lead to? And started looking into single families and disqualified them for various reasons. Nothing wrong with them, just very slow. And all the responsibility, as I mentioned in my previous videos, lies on the shoulders of the landlord. And I also looked at short-term rentals. A lot of that was great a few years ago, but after COVID, a lot of the cities came back and said, well, we're going to treat these and license this, and you now need to get approved or pre-approved. And so the value of those properties obviously becomes dependent on whether or not you've got licenses, and certain desirable cities where people want to travel to becomes a little bit more challenging. And then I started to look at commercial real estate, and I started to look at 8 unit, 4 unit, 5 unit. They're actually more than four, is what you need to call it commercial. I looked locally, I looked in different parts of Texas and Tennessee and South Carolina and multiple other states, mostly states that are growing and there's population growth. And what I found is everybody told me go bigger. And 20 unit, 8 unit, 12 unit, you're still sort of in landlord mode. But if you got a team of a maintenance person and a leasing manager and they're taking care of the asset north of 60, 80 units, your world changes. And what they really were trying to tell me is be on the finance side or be on the operation side, but pick one and you can drive a lot more scale. So that's how I got into it. And it really became all right, so now how do I go partner with the right team? Because the way the business model, that's my second point that I wanted to cover. The business model is really around you've got a team that's doing the underwriting and the deal finding. And that's all they do, and they do that very well. Or that's a primary core competency for them. And that's a full-time job. So that's a 40-hour a week, or if not more, with multiple people, not just one person doing it. And then the second piece of it is arranging the financing, looking at the debt, the equity, and arranging all of that on the finance side of things. And the third piece of it is really around taking care of the overall asset from an asset management perspective. And so putting all that together, those are three full-time jobs. And it really became how do you build trust? So I spent a good part of my time building those relationships. And that's really what's gotten me to this point to where I've got relationships with asset managers. I've got relationships with other general partners and deals where we co-GP or I co-GP with them. Co-GP is in general partners, and bring them together as a mini conglomerate that's assembled for a particular type of transaction to drive this forward. Building trust with them, absolutely critical. Looking at their track record, absolutely critical. So that brings me to my third point as you get started. It's all about picking the right market. So you got to be in the right state, in the right county, and the right city. And so you need to look at things like crime statistics. You've got to look at population growth. You've got to look at, what is the job growth like? What are the economic prospects? Is it a high tax, low tax situation? There's situations where there's a lot of folks in North Carolina that live in South Carolina for tax reasons. And so you've got those types of interstate dynamics as well. So certain parts of northern ends of South Carolina, for example, are great. Tennessee is also another great spot. Places in Texas goes without saying, and then you've also got to look at what is a really hot market versus what are the markets that are on the initial early stages. That's where you find the most value. So that brings me to my other point around part two of the third point, which is really around the right deal. And so typically you'll hear this terminology. It's in the email series: Class A, Class B, Class C. Class A, you usually get less returns because they're premium assets. Class B, maybe there's a little bit of it's a dated asset with some deferred maintenance. And then Class C's got a lot more deferred maintenance. Class C deals that are in areas that are growing, and where you've got staffing or needs for people from a work perspective to be there in person. So baggage handling, or hospital staff and people that need to be close proximity to an airport or to a hospital because that's where they work. And that is the backbone of the economy, where you're not going to get downsized or hybrid workforce away, and you've got a stable part, a backbone of the economy. And then coupled with that, improving living conditions for those types of tenants, that's absolutely a great spot to be and build the ability to improve their living conditions. And then back to the third piece of the third point is the right team. You need the right general partners, people that can underwrite deals appropriately. You've got to look at where deals break, where they don't break even, looking at things like, and again, this will be in the email series that you could sign up for, how to look at vacancy, how to look at interest rates, how to look at cap rates, how does all that interplay to where you get comfortable as a potential evaluator of a deal to say, that makes sense. Or I know it makes sense on paper, but if these conditions hold, which are reasonable, I'm very comfortable, or I feel very comfortable making this decision, as opposed to what might lead to other types of ways of looking at the asset. So de-risking it up front, understanding what scenarios work and don't work, to be able to make a comfortable decision is absolutely critical. Having a team that's done enough deals in the past, 10, 12 deals, and I got a great track record as the sponsoring GP, absolutely critical. Making sure you've got an asset manager that's got thousands of doors that they've dealt with and upgraded gives you a lot more confidence. Looking at how much the budget is to be able to do the upgrades on each one of these apartments, for example, and making sure that they can hit that $7,500 or $8,500 budget for the renovations is absolutely critical as well. And then you've got other dynamics like making sure that the rent comps are all going to make sense, and that'll also be covered in the series as well. So just a real quick summary of what got me into this, or what got into me to do this. That's what got into me to do this. And then the second piece is, how the business model works. It's about trust and a conglomerate of other deep relationships that I've formed, over the years with other co-GPs. That's absolutely critical. And track record, all those things matter. And then the last piece is when you start looking at deals, right market, right deals, and then the right team is essential. So take a look at the email series. You could join that below in the first comment. Just click the link, agilecapgroup.com, investor education. And you'll also got the link here that's been running on this video that you could check on to sign up on the website. And then if you could like and share the YouTube videos, absolutely be very, very much appreciated. So good luck with what you're about to get into here, and go ahead and sign up for the email series, and look forward to engaging with you once you get signed up. Thanks very much.